Uh, Mr. Mistry, thanks so much for joining in. I actually want to start off with the fact that how a large portion of an Indian financial institution deal has been cleared and has been subscribed to so convincingly. It just shows the kind of appetite that is there for some of the large marquee Indian financial companies.
I absolutely agree with you. I think from what I hear from market sources, the demand for the issue was 2 to 2.5 times. If you look at 2.5 times and a deal size as big as this, we are talking of a sum of over 20,000 crores of rupees. So there's a massive demand, which clearly reflects the fact that foreign institutional investors are looking at Indian financials in a big way.
Before we talk about this particular deal in particular, just a question on now that this exit has happened. Which of your other institutional investors, if you will, if you've just had a chance to probably look at what's there right now, still continue to remain amongst the large holders? And do they continue to do that? I mean, you would have probably had conversations with them too.
See, we have a list of shareholders, large institutional shareholders, which is there on our website. So apart from CITI and Carlyle, the other big groups, and these are foreign institutional investors, long-term players, not hedge funds, would be people like Aberdeen, JP Morgan Asset Management, so asset management side, Capital Group, and so on and so forth. So these are our large foreign institutional investors. And even on this deal, we understand that the demand has been largely from long-only foreign institutional investors, with a small piece being taken by local investors. Now, who the investors specifically are, at this moment, I don't know. But as soon as we get the name in our registry, we'll be happy to share the names.
Right. But give us a sense, Mr. Mistry, on how much holding are you comfortable keeping with large institutional investors at this point, primarily because now CITI has exited HDFC?
We are extremely comfortable with foreign institutional investors. They have been shareholders of HDFC for a very, very long period of time. And groups like Capital and Aberdeen and JP Morgan and many others, why name only three, many others, have been shareholders of HDFC for years and years. And these are long-only investors. These are not private equity investors. Now, Carlyle is a private equity investor. A private equity investor essentially has a limited time span within which they have to return the money back to investors. As far as CITI is concerned, there was always a little bit of an overhang which was there in the market, because once the U.S. government and U.S. Fed has continuously been shoring up the capital requirements for American banks, because of that, people have been worried about the fact that CITI at some point of time to sell. So the good part, if I may say, is that the entire block, the entire 9.5% has been sold in one block in one deal. So there's no overhang that is left now on the stock.
Right, but are you not at all concerned by the exit of Carlyle and CITI?
No, not at all. Why should we be concerned with the fact that they've been bought by large institutional investors? Is, I think, we've been very happy with CITI as shareholders, but at the end of the day, there was always that overhang that was there, that at some point of time CITI would need to sell shares to shore up their own capital requirements. It's nothing to do with the company. It's no reflection on the performance of the company, and CITI, I'm sure, will gladly explain. But it is the fact that CITI itself was having to shore up its capital, and therefore that overhang was always there in the market.
Are these new investors who you're talking to at this point comfortable with the valuations and the pricing that perhaps would be on offer to buy shares?
I'm sure they are, otherwise they would not have subscribed. And also the good part is that CITI has left a little bit of money on the table for the investors, which is always a very nice thing to do. And when you're doing a block this size, $2 billion, that's a very, very large block, you have to leave a little bit of money. And I'm glad they've left that money on the table. So like CITI has made a handsome return on the investment in HDFC, I'm sure the new investors also will.
Mr. Mistry, one last word really, and this is coming by virtue of the fact that the conversations that we've had with a few large real estate companies, and one more to follow today as well, have now been speaking about how the last couple of months there has been a sudden resurgence of buyers per se for the mid-income housing, as well as in some cases even premium housing. Are you sensing that in business, and do you believe that the next 6 months, if not the next 12 months, would probably be substantially better than how the last 12 months have been?
See, people talk about this slow the last 12 months. But to be honest, you've seen our results for the first 9 months of the financial year. We had seen a 25% growth in the loan book. We note that the slowdown, if any, in that first 9 months was primarily in large cities. You look at Mumbai in particular. Mumbai had seen a slowdown. But one of the reasons Mumbai has seen a slowdown is, one, property prices indeed are very high, number one. And number two, with high interest rates and with the tax benefits being defined in absolute rupee terms, the actual effective cost of taking a large loan, which is what you would need in a city like Mumbai, is very high. Let me explain this. If you take a loan of, say, 1.9 million, which is the average loan size, 19 lakhs, and if the interest rate on the loan is, let's say, 11%, then on a post-tax basis, your actual effective cost of taking the loan is less than 7%, because there is a fiscal benefit, there's a tax deduction of interest, there is a tax deduction of principal. But a 19 lakh rupee loan, nothing in Mumbai. So if you're buying a property in central Mumbai, your property price will be running into crores.
Right.
So therefore, you need a much larger loan amount. And for that large loan amount, the difference between the effective rate and the actual rate is very, very insignificant, because the tax benefits are in absolute rupee terms. And therefore, the higher the loan amount, the less will be the impact of the tax benefit.
Yeah, which is fair point, Mr. Mistry. But I just want to follow up on that point just a bit further. HDFC per se, even if the times are bad, would probably be able to hold its ground and exhibit the kind of performance that you've given in the first 9 months. The question mark really is, one, for the industry as a whole, and two, a follow-up to that is that after the last 12 months in Mumbai, wherein the permissions were not given for the construction and therefore sales trickled down completely, it is also seeing a bit of a revival, and which is where my point comes in. For the industry as a whole, by virtue of they also holding out and by virtue of Mumbai market showing a revival, you think the next 6 to 12 months would be better for the industry as a whole compared to what the last 12 months have been?
See, demand for housing is largely a function of the level of confidence of an individual. Buying a house for your self-occupation, you would like to buy, you would want to buy a house. Of course, affordability, that it must be affordable, the property must be good, family must like it, and so on and so forth. But the most important thing is that the individual who's buying a property and who's taking a loan for that property must be sure of his job. So if he feels that his job is shaky, may not get, then at a time like this, people would not like to buy a house. So as the economy stabilizes, as things start looking better from an industry perspective, people start feeling more confident. That obviously creates a positive sentiment as far as housing is concerned.
Okay. Great having you, Mr. Mistry. Thanks so much for taking the time out.
Thank you.
All the best for the next 12 months. That's K.K. Mistry. The stock may be 3.5% down, but certain marquee names have picked up the stake in HDFC, and the management not sounding concerned at all. As